As I explained a few weeks ago, I have decided to sell AT&T from my dividend growth portfolio and replace it with a couple of other stocks. If you look at my video dated June 2nd, 2021, you can see my reasons for selling AT&T and the list of stocks that I might replace it with. One of them is Prudential Financial, ticker symbol PRU, and that's what this video is about. This is Prudential's dividend record. It yields 4.6%, which is excellent yield. In my book, I consider anything over 4% to be a high yield stock. And since AT&T is itself a high yield stock, I want to be able to replace at least part of the income from AT&T via its replacements. It's been increasing its dividend for 13 straight years, which is okay. It's a dividend contender, which means that it has a dividend increase streak of more than 10 years. It's already increased the dividend for this year. Earlier in the year, Prudential gave a 4.5% dividend increase, which is middle ground and I consider okay for a stock that yields more than 4% to begin with. Its 5-year dividend growth rate has been high at 13% per year. Frankly, I don't think that's sustainable, and I think that looking forward, future increases are likely to settle in the 5 to 6% a year range. Prudential gets a dividend safety score from Simply Safe Dividends of 75 out of 100, meaning that the way they score the dividend is safe and unlikely to be cut. So that gets a green color in the interpretation. I put it all together at the bottom of this display. My overall dividend grade for Prudential Finance is a good solid B. I always like it in dividend growth investing to invest in companies that make a big deal about their dividends for obvious reasons. This slide is from Prudential's recent earnings report at the end of the first quarter of 2021. And you notice in that first circle off to the left, it says up 5%, and they increased their dividend by 5%, which we saw was actually 4.5%. But the point is, and the reason I'm showing this slide, is that Prudential does consider returning capital to shareholders via its dividend to be one of its priorities. Prudential is a leading financial services provider with operations in the United States, Asia, Europe, and Latin America. Its products and services include life insurance, annuities, retirement planning, mutual funds, and investment management. Prudential gets 22% of its earnings from its global investment management business, 38% from its U.S. businesses, which are dominated by individual annuities and life insurance, and 40% of its earnings from its international business, which is located primarily in Japan. This slide summarizes quality rankings from information providers in the financial industry. You can see what they are there. I won't go down at every one. The top one deserves a little discussion. Morningstar, which assigns moat ratings to company. A moat is a sustainable competitive advantage. Assigns no moat to Prudential. I don't think it assigns a moat to any large-scale insurance company. That is a philosophy that Morningstar has, that insurance companies are in highly competitive businesses and it is almost impossible for an insurance company to sustain advantages over its competitors. Most of the competition takes place on price for products that are more or less commodities. So I add up the various quality grades there and end up giving Prudential a C grade, which means it's a fine company, nothing really outstanding about it, nothing really wrong with it. Let's talk about some of Prudential's financials to get a better feel for the company. This slide shows annual revenues for the last decade. And as you can see, starting in 2014, Prudential has been slowly increasing its revenues until 2020. Revenues took a drop in 2020, and as with so many companies that we've talked about, that is because of COVID. You can see that in the last 12 months, which now moves a quarter forward from calendar year 2020, the revenues have started back up. And I expect that overall, I would expect Prudential to recover its revenues and its growth in revenues, which is slow and steady. Moving to earnings, you can see from this slide that Prudential registers positive earnings every year. There's a very slight growth uptrend in that slide of growing earnings, but again, they were interrupted in 2020 and are now in a recovery mode. Let's take a look at Prudential's balance sheet. It's interesting. Simply Safe Dividends, which is the source of all of these great financial graphs that I'm using, shows Prudential's debt as a little higher than Simply Safe Dividends likes to see for an insurance operation. That said, the company, in its recent quarterly presentation to shareholders of its earnings, portrayed itself as having a rock-solid balance sheet. It is noteworthy in this connection that Standard & Poor's assigns Prudential a credit rating of A, which is a solid and pretty high credit rating. So overall, I would say that Prudential's debt situation and its balance sheet is fine and nothing to worry about. One last point about Prudential's financials. It has an ongoing and highly effective share repurchase and retirement program going. You can see from this slide that the number of shares outstanding for Prudential has dropped every year over the past decade, including during the COVID year. The company has 20% fewer shares outstanding now than it did a decade ago. Overall, companies have to decide what they're going to do with their earnings. One option being pay it out as a dividend, which we've already explored for Prudential. Another option being to retire shares, which makes each remaining share a larger slice of the pie and more valuable. And we've seen from the dividend record and now from this share repurchase record that Prudential has enough profits basically every year to do both. That's good. This slide summarizes the financial aspects of Prudential that we've been talking about. Overall, at the bottom, I give Prudential a financial grade of C+. For those of you that have read the article upon which this video is based, you may recall in the article I gave Prudential a C. I've had a little change of heart while I made this video, and I bumped it up half a grade to C+. Prudential's in fine shape. There's nothing really outstanding about its financials, and there's nothing scary about its financials. Let's move on to Prudential's valuation. I use 4 models in valuing companies. I'm not going to go into all of them here, but I will show you one of them. This graph shows one of the 4 models I use, which compares the stock's current yield to its 5-year average yield. The idea behind this valuation model is simple. If a stock is yielding more than it usually does, that suggests that its price is lower than it usually is, and that the stock may be undervalued. The opposite is also true. If a stock is yielding less than it normally does, that suggests that it may be overvalued. Prudential's current yield of 4.6% is 18% higher than its 5-year average of 3.9%. And that difference, that spread on this particular way of estimating valuation, suggests that Prudential is undervalued. This graphic shows a summary of my 4 valuation models. You can see that 2 of them show Prudential as undervalued. The one numbered number 1 has a valuation ratio of 0.72. Anything under 1 suggests undervaluation. And the one I showed you is number 4 on this slide, the yield versus historical yield comparison, where we saw that Prudential came in at 0.85, which suggests undervaluation. The other 2 come in as fairly valued, and Morningstar, interestingly, their valuation model has Prudential as overvalued. When I add them all up, divide by 4, which is just a simple way to do it, I come up with a valuation ratio of 0.95, which suggests a slight undervaluation, 5%. I consider anything plus or minus 10% to be fairly valued. Valuation is as much art as it is science, and I don't attempt to get too precise about it, so I leave cushions where I can to characterize the valuation of every company that I look at. When I take Prudential's slight undervaluation and apply it to Prudential's price, so now we're talking dollars instead of ratios, here's what I come up with. I come up with a fair price shown in the 3rd column here of $106 for Prudential. To the far left is a bargain basement price, which would be 20% off that, would be $95 a share. Its current price is $101 a share, so I see it selling at a price right now that is attractive. It's less than my calculated fair value. On the far right, it shows how much I would the most I would pay for Prudential given its most recent financial report, which is $112 a share. But I don't really have to think about that because it's selling for so much less than that. Here's my bottom line summary on Prudential. I've divided it into 3 columns: pros, neutrals, and cons. The pros, as I see it, for a potential buyer of Prudential, which is what I am and why I'm doing this video. Attractive parts of Prudential's record include its high yield at 4.6%, a decent dividend growth rate for that yield of around 5% a year is what I think it's going to settle in at. A good dividend safety score of 75 out of 100, suggesting that its dividend is safe. It's been profitable every year. Sometimes you see a company's profits, they'll have an occasional unprofitable year, profit goes way down and then back up. Prudential doesn't have that. It's solidly profitable every year, and we did see actually a slight rising trend to its profits until COVID hit. And finally, as I mentioned at the time, I like to see a company that is steadily retiring its shares, and Prudential has been doing that. Neutrals would be the okay financials. As I said at the time, nothing outstanding, nothing scary. They're fine. The average business quality overall, which included that no moat rating from Morningstar, if you agree with their reasoning about that. And even though Prudential is slightly undervalued at 5% by my accounting for it, the cushioning around it actually puts its current price in the fairly valued range. Cons has nothing under it. I don't see any ridiculously bad things about Prudential that would make me, or I would suggest any investor, really hesitant about investing in Prudential. And that's a wrap for this video. Please remember to click the buttons. I'll be back in about a week with an update on my dividend growth portfolio. Thanks for watching. Bye, everybody.